I do think that there's going to be a new meta that forms, and I think we're probably a couple months away from this. This is probably a 2025 theme, but the meme coin meta turns into the AI agent meta.
Yeah.
And you're going to have agents that maintain their own ecosystems, maintain their own coins, and they're going to launch their own things. And like that is going to be wild and crazy because there's literally going to be no one behind it except for this agent. And that, what it does, people will be following it. Like you turn it from this internet meme into what will the internet actually do by itself with its own volition and its own power and now its own money. That will be a fantastic experiment.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. Everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2, Vance. How you doing, fellas?
Doing well.
Looking good. It's looking good.
Big week.
NVIDIA didn't shit the bed. so I think we have at least another quarter.
Yeah.
No, I think we're looking pretty good. Everything seems to be rallying, and yeah, I mean, we've definitely seen some of the most interesting pitches over the past couple of years in the past few months. So I think that's the barometer of, our bullishness. If we're seeing just like, the 18th DEX again, gets a little tiring. And yet we see other people fund these things and it just boggles the mind. And one thing we should probably talk about is like, we do periodic updates on like exchange listings, tokens. Obviously like meme coins are now a thing and they're getting listed, and, Peanut Squirrel had a tough 24 hours. I'm sure that community will rally back together, but there's more tokens than ever and there's more choice than ever for retail. And it's a question of like how you stand out when there's a narrative of the morning and then the afternoon and then the Asian narrative. And by the time you wake up, some of these things have kind of gone full circle.
So, what else I find interesting is that for the first time, it seems like TikTok is actually going to play a pretty big role here when it comes to meme coins. Have you guys seen this chill guy meme that is going around?
Yeah, I mean, I feel like by the time this comes out, that may be
toast.
Relevant. I feel like, what are you talking about? I do think, Phantom #1 in the App Store. I guess that was yesterday. Definitely
number 6, I thought.
Yeah, number 6.
Oh, sorry, not #1, number 6. But like, we have seen even the smaller wallets in our portfolio, like, 700, 800% increase in transactions and users. So it's happening across the board. But I've gone on TikTok looking for crypto TikTok. It still kind of isn't a thing, I would say, honestly. Like crypto Instagram is probably more of a thing. It's definitely more millennial on Instagram.
Yeah.
And it's more about the asset on Instagram, I would still say. Buy some Bitcoin, buy some ETH, buy some Sol. On TikTok, it does seem to be more about the wallet. And I think that is going to be an interesting harbinger for like the dispersion of, like, it seems like base meme coins are starting to catch a bid. Like even Ansem tweeted, my base meme coins are going up, which I think was probably hard for him to tweet, but it's true. And I think there's like, I wouldn't be surprised to see Bera, meme coins pop off. And, I think if it's just like this wallet, and one of the apps in our portfolio is called Slingshot, and they just do like complete chain abstraction. It's just like USDC and buy whatever meme you want in whatever chain.
Yeah.
It really is seamless. And a lot of these user experiences are getting to the point where it's basically intent based, which is really, really cool.
Like just to hammer the point on Slingshot, and they launched a couple weeks ago. But I think one of the major differences of this cycle versus last cycle is mobile versus web.
Yeah.
And being able to have a mobile experience. Slingshot is in the App Store. You can trade across any exchange, any blockchain you want. You don't even know that you're on Solana or Base, or you have to deposit onto one of them, but then you can basically trade any asset. That experience is frankly what we've been waiting for the last 4 years, and not having to go to your website, whatever, to DEX to trade. I think this is going to be a fundamental shift from retail adoption, just being able to have a mobile experience to trade these things.
Well, I'm interested. The reason I think TikTok, if it ends up being a big onboarding channel for retail is interesting is just because it's a very different, it's like a very different sort of vibe and interest. And I've thought about this a lot from like putting my Blockworks hat on and media. And, you know, we conceptualize as creating content and delivering insights mostly to crypto Twitter. Like that's who we view as our audience. And for a long time, people have been telling us, hey, the audience doesn't actually live on Twitter. It lives on Instagram or it lives on TikTok or something like that. And our response to that has always been, in order to create content that's going to resonate with audiences on that medium, you need to really drastically change the type of content that you're going to create, right? And so it's interesting to see the type of stuff that people want on these different media. I'm just interested to see if this ends up being an enduring trend or if it's not actually a thing and it's still just crypto Twitter is basically the tastemaker for this cycle. But it's interesting. And it's definitely a much younger, much more Zoomer sort of active demographic on TikTok. So if they came in, I think it would actually have a pretty big impact on the market and meme coins and all that stuff. But yeah, I don't think it has to be a Solana story at all. I think it's definitely going to be a chain abstracted, you know, like wallet sort of story.
Yep. I mean, I think they will come in for the memes and stay for the network. Stay for the longer dated investments. Cause like, it's kind of maybe analogy is like daily fantasy sports or like sports betting. Yeah. You come in, you churn, you bet, you love it, you hate it, you leave, but then you probably still manage your fantasy team, and that's kind of like your long-term relationship. And like Michael and I, early ETH, early BTC, and then frankly, like the first wave that we were really in was the ICO bubble, where we were like really active on chain. And those were in some senses meme coins. Chainlink was definitely a meme coin, but it had like this longer perspective of utility and like aligning over the long term to this like ambitious vision. Yeah. I think the question for each asset now is like, what differentiated bit are you bringing with you? Because if you're the 10th DEX on the 5th L2, that's tough. But if you're doing something that really stands out or is new or is novel, I think you're going to win points for that. So it'll be interesting to see. I don't know if I'm a huge bull on like any specific meme coin. I do think they will be a feature. But what retail is doing is they're kind of like, not to overuse this, but democratizing access to venture style returns. Yeah. Whereas that used to be the purview of VCs, it's now like, people can hit 100x getting in on a market cap of, 10K and it goes to 10 million, which is like,
or a ski group can pull some ones together and say, a nice trip to Breckenridge.
I mean, the new meta is low or high float, low FTV, low liquidity, high volume. Like, it makes no sense, but it makes sense when you think about the wash trading bots. But like, if you're a little butthurt about people flexing huge meme coin P&Ls, and I like follow this account, look on chain. It's like this guy turned $64 into 85 million, and it's like, well, there's only 230,000 in the LP pool, so like, how is he going to turn that 85 million into money? That still relies on exchanges listing. And I would assume they're kind of done for the moment. Like they had this big catch up wave of like Pepe, Dog with Hat, Peanut the Squirrel, who knows, Nero. But like, what's the mechanism for these new meme coins to now, get on these exchanges? It's kind of like chicken and the egg problem because they need to be low valuation for Binance or whatever to list them. But like people are trying to, get these things to go very, very high on chain. So there's kind of this weird Mexican standoff happening with memes and exchange listings now.
Well, I think that part of that story as well is the people got sick of the high FDV, low float, more, cerebral type coins that were sort of down only after listing. And I think exchanges actually are pretty sensitive to their customers losing money trading these things. And so now there's the perception that meme coins, maybe actually from this is just way outside of my purview. Maybe they're less worried about them there's a regulatory angle on meme coins that they're less worried about. Maybe it's just looking out for their customer standpoint. But we've been talking about it on the show forever. I saw a statistic the other day, 60,000 new assets launched on Pump Fun. And like, I hate to be the boomer just repeatedly saying this over and over. What this reminds me of, though, is the NFT kind of double bubble type thing, where there was initially with NFTs, there was kind of like Bored Apes and Punks were the two. And then there was this extremely wide dispersion of JPEGs, which did really well, but then eventually it collapsed. The market collapsed on top of, it was a supply driven collapse. And I don't know when that ends up happening for meme coins, but doesn't it feel like the rotations are getting faster? It was sentient AI memes like last week, and now it's TikTok memes, and the rotations.
That was so funny. The AI 16Z thing. The dude literally went through, grinding founder hero to villain arc in like 8 hours.
I kind of missed this.
Shelled like 70% in like 3 days. It's just, I feel like it's happening faster and faster. The ICO bubble. What was remarkable about the ICO bubble is that there were such few coins that the hit rate was basically astronomical. Like if you could produce a coin, it would go up, and that was the hard part. Pumped Out Fun is just like click, boom, and who knows where it goes. And I do think there will be supply overwhelms demand. I also think the rotation is also kind of like an asset class in some ways, where you're just playing hot potato, but burns hot, probably burns out pretty quick.
I mean, the promise of the ICOs was that the only way that you were able to have something that would work, in the way that you're describing, Vance, was if it had the promise or the potential of utility eventually. And it was all sort of like, okay, what's the white paper? How legit is it? Who's signed on to be an advisor? Like all kind of like vanity metrics in terms of real value and real utility. But you still had to have the promise of real utility for it to do well eventually, Yeah. You're like, we're going to partner with Visa. We're going to build a Visa credit card that's powered by our blockchain and like buy this token. I mean, 99% of that stuff went to zero. But the meme stuff doesn't even pretend to like have eventual utility. Like the eventual utility is like the meme persists and becomes something, Mudang level or Doge level. I don't know what the like pinnacle of meme success is, but there is no promise of utility. Like it's just a listing. So these things naturally. Right.
It's pre-revenue. It's a pure play. Okay.
This is Russ Hanneman approved.
Permanently pre-revenue.
Yeah.
I mean, but what's funny is like AI16Z launched the coin. It was a meme. They're aping A16Z. And then they tried to build utility. We have a creator fund for AI developers. We have all this stuff. And then they basically just like, kind of just like tripped over themselves and just knocked out their own front teeth. And, they're building it backwards. They build the brand first, then they build the utility. And I think that's, Retardio, which is another meme coin, has its own casino. That doesn't seem to have helped the price at all. It's like, down a bunch.
I do think that there's going to be a new meta that forms, and I think we're probably a couple months away from this. This is probably a 2025 theme, but the meme coin meta turns into the AI agent meta.
Yeah.
And you're going to have agents that maintain their own ecosystems, maintain their own coins, and they're going to launch their own things. And like that is going to be wild and crazy because there's literally going to be no one behind it except for this agent. And that, what it does, people will be following it. Like you turn it from this internet meme into what will the internet actually do by itself with its own volition and its own power and now its own money. That will be a fantastic experiment.
I agree. I do think that this early one thing that I think humans have been pretty bad at is predicting how AI is going to be used in general. I mean, even just you look at how we forecast out technology on a long term. We thought everyone was going to be driving around, flying cars, right, with the Jetsons back in the day. But instead, it's just like you have a supercomputer in your pocket, and everyone thought that the creators were going to be protected and you can't replicate human ingenuity. And it looks like they might actually be the first to go. Who knows? I have no idea how AI is going to ultimately end up being used. I do think it's funny to watch some of these AI agents tweet. There was actually a funny meme or a tweet that I saw, which is the old scam used to be bots pretending to be people, and now it's people pretending to be bots, which is there's that.
That's pretty good.
Which is pretty good. And there's definitely some of that's going on here. But yeah, I guess we'll have to see. We'll have to see what ends up happening there.
The metas are moving faster. They're also becoming much more retail oriented. Like, remember when the meta was like data availability?
Totally. Yeah.
A year ago?
a year ago. Yeah, I mean, like it's like I can't even remember what the meta was 2 months ago. I honestly, where we're spending most of our time is like, what is the meta in 5 years, based on fundamentals.
So maybe we should talk a little bit about, I mean, we haven't even talked about Bitcoin. It's been a pretty killer last couple of weeks for Bitcoin. We also got options that went live this week, and there's been an enormous amount of trading activity that's happened specifically on IBIT, the BlackRock ETF. And I saw an interesting thread around this, that an enormous amount of the trading volume, it was like something just under 2 billion notional volume traded on the first day. And a huge percentage of that was deep out of the money call options. So there's a very heavy skew towards call options as opposed to puts. So you get this like kind of volatility smile that options traders like to talk about. And there were a lot of deep out of the money, which suggests they're basically lottery tickets. So it suggests retail buying for this stuff. And you're also kind of starting to see that as well. And the meme coin side of things with these TikTok nice guy or chill guy, sort of. So I don't know. It's kind of made sense to me that retail would return at a convincing break of the previous all-time high. And I know we technically broke the all-time high before, but now at 97K or 98 or whatever Bitcoin's currently trading at, we're probably beginning to see the signs of retail entering back.
Retail is coming back in basically all the metrics that we just talked about, whether it's meme coins, whether it's app store ranking, whether it's call put spread. I think there seems to be general consensus among retail that there's a gravitational force pulling Bitcoin higher wherever that lands. Who knows? But it's just kind of a question of time. But I do think that it's perfect timing, frankly. And historically, some Thanksgivings have been good, some have been bad. But, we are exactly 7 days away from Thanksgiving. And there's a lot of people going home to talk about crypto in 7 days. And it's going to be interesting to see what happens after that. Friday might be an interesting day next week.
Mm. There is, I think basically what you're waiting for is like Bitcoin to be fully priced. Maybe that's 150K. I also think like at 100K, people are going to be like, I missed it. What else is out there? And there's also diminishing marginal returns to the Sailor bid and the Bitcoin ETF inflows. And he's buying 3 billion today, and there's probably like 1 billion of ETF inflows today. And the price is like up there. I just think there's a lot of people who are like, I've been holding on to Bitcoin since 3,000 and it's at 100,000 and now it's time to sell. And that'll diminish eventually. But there are, there's lower marginal returns to the bid. Bitcoin still probably goes to 250K, 300K, but it'll take a while and it'll necessitate, central bank buying and things like that. But, I don't think alt season is too far beyond the corner. And you see Dog with Hat and you see Peanut, and these are all great, but it's like a 2.5 billion and 1.2 billion coin respectively. At this point in the last cycle, we had, 5, 6, 7 protocols, L1s that were, between 50 and 100 billion. So I think it's longer cycles, higher for longer Bitcoin prices. It's just a really bullish setup. And it's funny. It's people like a week ago were we broke out of a 7-month consolidation. It's up only time. And now on my timeline, it's the cycle's in its final innings, and there's all these top signals, and be fearful when others are greedy. I think that's just a symptom of spending too much time on crypto Twitter, which I'm also guilty of. But
Same. Yeah,
you gotta take a step back a little bit.
One of the other things that we've been spending some time on, obviously post election, is just what happens next from, and who knows exactly the order of operations, but some of the major milestones that I would think about in terms of the next 12 months, in terms of the government. Obviously, we're going to have clarity eventually here, and don't even know who. Every single day, it feels like there's new names being tossed around for SEC, for CFTC. Don't have any perspective on that until it's finalized. But it seems like consensus is Mark Ueda will take over as the interim chair until there's an official appointment. That official appointment probably won't happen until March, if we're being realistic, and maybe February if they're moving fast. But given that it is a red sweep, the other sentiment is that there's going to be a lot of effort initially to focus on things that are not crypto. And this will be, immigration, tax reform, government spending, the stuff that they really have to get done initially. But also, we want any sort of crypto reform to be something that is bipartisan. And it has to be something that isn't pushed through in a reconciliation bill. It has to be something that's supported across both sides. And the timeline for that is honestly probably a year from now, which is actually a good thing. But what that means in the meantime is this regulation by enforcement policy goes away for the next year, and we take our time to build the best possible bipartisan crypto market structure bill that we possibly can. Stablecoins gets a feature of that. Maybe there's a DeFi element or maybe a DeFi carve out. Who knows the nitty gritty, but we want this to happen. And so if we're sitting, September of next year, having these initial conversations after they've done all the legwork on, the stuff that they wanted to get done in the first half of the year, that's going to be a catalyst in and of itself, because it'll officiate the recognition of digital assets as a new asset class in the United States. And that is a massive seminal moment, the thing that we've been fighting for the last 8 years. And so I actually think, one of the questions I got from two different founders in the last week was like, what do you think about the market cycle and where are we? But also like, where does this end? I think that we might actually be looking at something that's fundamentally different based off of two factors. The first is the ETFs. And I think officially the Bitcoin ETFs have crossed 100 billion in assets, which is absolutely bonkers.
That's
And that's a liquidity black hole. We haven't even turned on the wirehouses yet for RIA money, which is where the bulk of the assets actually are. And number two would be a market structure bill that denotes crypto up there with equities and fixed income and real estate. And it's an asset class. And now there's rumors of having a crypto czar in the cabinet. There's Tim Scott is most likely, I think, officially going to be the chair of the Senate Banking Committee. His first order of business, he has said, is to create a crypto subcommittee underneath Senate Banking, which is huge. Like the stuff that the catalysts that are up on the horizon, they're still 6-9 months away, but these are fundamental catalysts that I think drive adoption even further. Because once you get clarity, think about all the financial institutions that are waiting for that clarity, who haven't been able to touch Bitcoin or crypto or DeFi, that are just waiting on the sidelines to be able to interface with it. I think there is a strong chance that this is a fundamentally different market cycle. And to say that we're at the end of the cycle is preposterous. I even think that we might even be entering in the super cycle.
Wow. Pack it up. Pack your knives and go. I do think that's basically all true. Super cycle, I like it.
Super cycle is intact.
I like it.
And
I mean,
Suzu is
SBF is in jail.
Yeah. so
Suzu's on the run. Kyle, who knows who the fuck he is, but I do think it's going to take a bit longer. Mostly because Mitch McConnell has said no recess appointments, which is absolutely hilarious. Mitch McConnell is also the least popular politician on the planet. Like, there's like all these favorability ratings, least popular in the Senate, least popular, known public figure. And so I think the actual confirmations are going to be like summer of next year. Like, it's going to take a while. If not take recess appointments.
But confirmation. I mean, I think things like SEC, CFTC, those will be a little bit more, middle ground. If there's no recess appointment, we'll see what happens with Matt Gaetz. But
what is the recess appointment thing? Sorry, what does that mean?
Recess appointment is basically asking the Senate to be on recess so that they don't have to go through an official vote to verify these cabinet members. It's like a fly-by-night method of getting people into these positions, which is also technically you can do it, but it is like not in the spirit of democracy.
Yeah. Also, Michael and I, we talk politics a good amount, and one of the contrarian opinions I shared earlier in the year is that Matt Gaetz is ascendant, and I'm like very bullish Matt Gaetz. He is the most hated man in Washington,
yes.
Similar to Trump, and he's basically like the Trumpiest version that is not Trump. And so I think in 2032, the presidential matchup, Matt Gaetz versus John Fetterman. Just going to put that out there. the working man's, party of the people, Fetterman versus, Trump 3.0.
I think populism is basically just that's the story of the Republican Party. It's not surprising to me that Mitch McConnell is the least popular politician because he represents this old school of republicanism that is kind of dying. And I think there's a new school. Yeah.
Let's talk about Sky.
Yeah. Let's talk about Sky. So Scott, well, actually, here I'll tee it up, but I would love to get your guys' perspective here. So this was something that at least I have been waiting for, because when Rune teased his original end game, he talked about launching at the time it was Maker Chain, now it'd be Sky, and going multi-chain, which I think was a big surprise. He talked at Rune spoke at Breakpoint this year as well, and so people have known about this move to Solana for a little while, but just this week, USDS, which is the rebranded DAI, went live on Solana. And I believe, I was looking at numbers this morning, but it looks like there's some 80 million worth of USDS already live and trading on Solana. And it seems like it's been integrated across many of the existing DeFi platforms, the Jupiters, the Caminos of the world, etc. So yeah, I'll pause there, but yeah, give us the kind of inside scoop. Like how should we interpret the prospects for USDS on Solana?
Well, one thing I'll add, and then I'll let Vance dive into USDS specifically, is just the comparison of let's just like compare the metrics on Ethereum versus Solana broadly. And what you've got generally is you've got more volume is being traded on Solana. And that volume is primarily from meme coins, as we've been talking about, and pump fun, being able to have meme coins there. You're trading these assets on Solana. And so the volume is much higher, I think by a factor of 3, than volume traded of assets on Ethereum. On the flip side, you've got amount of stable coins on Solana as like a 20x difference. It's 20x lower than what you have with stablecoins on Ethereum. And so Ethereum, at least to date, is the place where RWAs exist. It's where stablecoins exist. It's where assets are existing. And what that suggests to me is that there's sort of like this desire to have more novel, interesting, permissionless stablecoins that are widely adopted on Solana. And it is a need that the Solana ecosystem has. Because right now, what you're trading with meme coins, the trading pair is SOL. And so you're trading against SOL. It's the exact same thing that Ethereum went through, 3-4 years ago when everybody was trading NFTs, or especially what was going on in 2017 when people were trading ICO tokens. It was all against the pair of ETH. And so ETH gets the bid because you need to have ETH to be able to buy these things. I do kind of wonder what happens once you can dollarize a lot of these trading pairs and have them be against something that is, priced in a dollar, priced in a stable coin. But it does feel like there's a need for more stablecoins, or a desire to have more stablecoins on Solana in comparison to Ethereum.
Yeah, I also think it's worth getting into a little bit. So I'm a big fan of just Sky in general, and I think Spark is doing an exceptionally good job. And I don't, even it wasn't super clear to me actually what the business model is for something like the relationship in between something like Spark and Sky, but it's basically it's very similar to the kind of central banking, commercial banking relationship where Spark ends up getting basically preferential funding rates, and they, are much more specialized in terms of how to actually lend that out and generate yield, and they make money on the spread, which is a great business model. And Vance, I saw you in the bell curve Telegram, which I actually shell to the bell curve Telegram. It's called Left Curvers. We'll link it in the show notes if you're listening to the show.
It's pretty lit.
Join it. Yeah, it's pretty lit, actually. And Vance, I saw you going back and forth because I believe someone, Eugene, asked why would USDS be different than PYUSD, and you were getting into kind of the business model difference between USDS and the niche that you see that filling. So can you just talk about that for a little bit as well?
I mean, stablecoins are actually pretty hard to understand, especially algorithmic ones. It probably took me a full 9 months, a year to like fully get Maker, and that was after we bought Maker. And we bought Maker because we saw basically these two other large firms selling it and Rune buying it with his own money. And that's the first time I've ever seen any founder buy their own token, especially at like $50 million size. So like a little bit of like invest and then investigate. But like we knew how it worked. We just didn't really dig into it. And the thing to understand about Maker is that the path to stablecoin adoption for most stablecoins is you use it as collateral and then you use it as payments. And Maker is a purpose-built collateral lending stablecoin. And what that means is, say there's very high APYs on Camino Finance on Sol. Basically, what Maker can do is just spit USDS into that pool until that APY comes down. You spit more supply into the pool. The cost to borrow is cheaper. The APY goes down because people loop it, and you realize adoption and stablecoin growth through that. And it's not dissimilar to, Maker was one of the main collateral asset, or DAI was the main collateral asset for a lot of people who are looping Luna.
Yeah.
Basically, like what Rune said is like, look, you want to like, Luna is a Ponzi, but you guys want to, use our stablecoin to get 20% APY, like knock yourself out. We're going to have an auto liquidation at a certain DPEG price, and we'll get all the collateral back. But, this is going to grow the stablecoin supply. And so really what's happening on Solana is people are starved for stablecoins because there's not that many. And when you think about Maker being able to programmatically just spit USDS into pools with high APY, that's a lot different than something like a PayPal USD, where it's like, okay, we need more PayPal USD on chain. All right, well, do you know anybody with PayPal USD? No, we don't know anybody with PayPal USD. All right, well, can you get a hedge fund to mint some? Well, we don't. Okay, well, I know one hedge fund. Okay, they minted some. All right, can they put it into Camino Finance? It's like, well, they're not comfortable putting it into lending markets. And then it just like kind of the growth stops. That problem is not the same thing for DAI because it has this allocation system that sits underneath the central bank of Maker. And it's just really bullish to see, it's doing 140, 150 million of earnings. It's buying back its own token. It'll be deflationary on an order of about 10% per year. And people are like, well, it's not going to be the size of Tether. It's like, well, yeah, no shit. Tether is like $200 billion of stablecoins on chain, or 130 billion. But if you can have, $5.5 billion of DAI spitting out 150 million of earnings, and you have a path to double that, it's number 2 app behind Pump.Fun in earnings. And I think the other thing that people are kind of fading is, we came out as in support of Maker Endgame and specifically the Sky rebrand. And, people are fading unit denomination bias when the entire meme coin cycle has been powered by that. Like, I'm pretty excited to see the migration of Maker to Sky in the coming weeks, the turning on of the endgame incentives, and then the continuing growth of, now it's on Sol, it's going to be on Base pretty soon. And the more they can do that, I think they're going to just execute and win. And I do think, coming into 2025, a fresh coat of paint, a new brand, a new name, and frankly, like transitioning that on CoinGecko and CoinMarketCap, that is probably going to be enough to kickstart the flywheel. So we're very bullish on Maker, and we're excited about what they're building.
What else this model makes a lot of sense to me is if you think about the central bank versus commercial banking relationship, you trust the commercial bank to actually be able to manage their, their balance sheet and allocate to different, yield generating opportunities. You wouldn't really be super confident in the Federal Reserve's ability to do that. So it makes sense to me that someone like Spark should be able to find good, better yield generating opportunities. And yeah, I think, Vance, what you're basically alluding to, right, with like supplying Camino with, additional liquidity, that's like the D3M module. So this has been deployed very successfully on Aave and markets like Lido, et cetera. So yeah, I think it just makes an enormous amount of sense. Here's one thing that I would be very curious to get your guys' perspective on. So let's just say that this year progresses and you do get something like a FIT bill and maybe a stablecoin bill. I would guess that the BlackRocks, the JP Morgans of the world also look at stablecoins. And I would be curious, when you see a bunch of banks like US banks and large asset managers issue their own stablecoins, whose market share does that eat into? Does that eat into the USDCs and tethers of the world? I don't know. I think some of these, that's what I would sort of anticipate, right? Like, I feel like that is whose market share they're going to eat, whereas the USDS of the world just fit a very different niche and actually might do slightly better in terms of holding on to their market share when these big regulated blue chip US stablecoins launch.
I would be more nervous if I was Circle and there's a stablecoin bill coming.
Yeah.
Tether, I think, will be one of the largest financial institutions on the planet. And like Tether and money more broadly is like a pure network effects business. it's trusted because it's been used, because it's trusted, and it just feeds on itself to some degree. I think one of the questions for like the JP Morgans of the world is like, how comfortable are you with putting your money on Binance?
Yeah.
And that's kind of Tether's edge. And Tether is very specific about the chains that they want to mint on. There's only 7 today, versus Circle, who's kind of like, dictating or relying on their growth strategy being the growth strategy of the underlying chains. So USDC is on Aptos now. They're hoping Aptos grows. They're hoping they kind of do the legwork. But Tether is more like exchange centric, is kind of how it seems. So I think USDC is at most risk. But all the lending stable coins, like, it's not like, JP Morgan's going to be like, ooh, there's some high yield in pool 2. Call your guy, get him to spit out some JP Morgan bucks into pool 2.
Ooh, we dropped the yield. Pull back.
Which is like the point around my earlier comment of like, USDS doesn't need to get to even 20 billion to be massively profitable. That's why these more niche stablecoin lending products work. I think where you don't want to be is like a PayPal USD, where you don't quite have the scale to take on USDC, and you don't quite have the lending market, savvy to take on, a USDS. There's like a messy middle of the stablecoin market.
The other angle here too, just on the BlackRock side, is, BlackRock has BUIDL, and the ability to put assets on chain is probably what they will focus on first. Not necessarily just dollarized assets, but potentially T-bills, potentially other types of fixed income. And if you have that is your collateral base to be able to mint a stablecoin against. And so, even further to the point on PayPal is not a financial institution in the same way that BlackRock can produce assets and put them on chain and be able to mint a new stablecoin against it, or partner with a USDS, or partner with BUIDL is going to be part of the, and I can't remember the name of it, but the Maker program. Exactly. And if you've got the collateral base and they've got the ability to mint, like that's kind of a perfect partnership.
Yeah.
The other big winner of USDS on Solana, to Michael's point, is what the fuck? Now I'm geo-blocked from even looking at these markets. Oh no, I'm not. The things that are really interesting is this. This is just mooning. The supply. It's going up. And what is this exactly correlated with? Correlated with this. Like USDS powering Jito higher in terms of supply.
Because people are looping. And then let's just see how Jito has been growing. This thing is ripping, And, I think the other catch-up trade that's going to happen, like I think ETH starts to catch up to BTC. I think Jito starts to catch up to Sol. Because like so much of the economics of Sol are in Jito now.
So,
and the story of what's beyond meme coins. And like the first order primitive is like lending. Money.
There's so many parallels to how the Ethereum ecosystem developed as well. There was, in the beginning, there actually was an enormous amount of demand to hold stablecoins on Ethereum in the beginning because there was so much that was going up and so many ways to make money, right? And then only once a whole bunch of wealth ended up getting created in that ecosystem, do you start to think, well, maybe I'd like to hold some of this in stablecoins or something, and maybe I want to just generate a yield here instead of, having this YOLO'd into, DeFi summer tokens. And I wonder if something similar happens on Solana and it ends up being an enormous boon for, Jito or any stablecoin which is able to generate yield for you. I think that'd be interesting. The other thing that happened this week as well is something that's kind of interesting to watch is Coinbase. You can now earn, what like the 4.7% or whatever APY just holding USDC on their wallet, which I think is a pretty cool feature. They have Circle and Coinbase have this JV called Center. And I think that is technically the issuer of USDC, and there's some sort of rev split. And I don't know the specifics of it, but I know the rev split is higher to Coinbase when it's actually held on the Coinbase platform. So you get this really nice, like just under 5% yield if you hold USDC on the actual Coinbase platform, and that got extended to the Coinbase Wallet this week. So they're doing a really good job of pushing people on chain in general. They're doing a good job of moving USDC onto Base. You can now earn the same yield that you would earn if you were custodying your assets on the platform. It's a very interesting ecosystem to watch. I know that's like the least original take of all time, but yeah, I just keep looking at Base. They're crushing it from my perspective.
I mean, so you put USDC in your Coinbase wallet, right? It has to be Coinbase wallet.
Yep. Yeah, in your Coinbase wallet. Yeah.
Historically, it was USDC stored on your Coinbase account.
Right.
So if you have it, but I think it's also not for Prime users. And so it's just your Coinbase.com. And if you have USDC on your Coinbase.com and it's just sitting there, you are earning implicitly 4.7%, whatever it is. Now what they're doing is they're saying we're extending that to Coinbase Wallet and slowly moving people. I mean, the transition that Coinbase has been running has been pretty phenomenal in that, think about it. Just started with Coinbase.com. Then you had GDAX, which was, the institutional pro adoption.
Yeah.
Now it's Prime.
Times on GDAX.
And but the interesting part now is like their entire push is to move things on chain. And
it's smart.
Incredibly smart.
I was thinking
I think the people that lose from this are kind of like the RWA providers.
Right.
Yep.
So why would we do it with you if we could just put it in Coinbase? I guess there's less composability.
You have to have it in your wallet. Exactly. And it's not like you can have staked USDC be earning 4% additional. It has to be just pure USDC. It is an incentive for you to have things more on your Coinbase wallet. I think this move in and of itself is not the most important thing. I think what it does signal is their just intense institutional desire to have everybody transact on chain, which I think will be phenomenal. But this move itself, RWA RWA providers are definitely losers. The other ones are just like net new stablecoin issuers that are trying to win out on yield. Like there's now like not much reason why you wouldn't just have Coinbase Wallet where you can do all the DeFi things. You can interface with anything you want, and any additional USDC that you're sitting on, you just earn yield.
Well, have you guys seen this fat wallet thesis that's been floating around? I think this was from one of the. The reason
we do this literally every 3 months with we call something fat, and then it's like, this is the new.
I know. Well, I think people are just calling wallets brokerages. The reason why everyone is excited about wallets is the aspects of them that look like brokerages, right? They're order flow originators, and in theory, that order flow is very useful. I also think that probably the users of remember there's a big push when there was online brokerages. The amount that platforms were willing to spend on users was very high because people are really sticky. They basically don't move. And I wonder if that dynamic is going to be similar in crypto. I was talking to a guy at DevCon from Uniswap, actually, who mentioned, I'll try to find the research report that he was referring to, but in some of their research, they actually found, I think he was talking about their LP base, but it's really sticky. It's very, very sticky and not very mobile. There is just as you would expect, there's kind of this hot ball of money, very active farming contingent, which actually does move from protocol to protocol and layer to layer. But mostly once people go somewhere, they just kind of stay. And I would imagine Coinbase has done some sort of analysis on that as well. And they're just trying to move everyone to their layer, which is Base. And even like that USDC yield's probably, there's some amount of marketing spend there. Like if you look at, it's not, because I think that what they're paying out is higher than short-term rates. So, but yeah, I
guess that is right.
Yeah, it's a pretty interesting move.
I don't know. I think as you see more dispersions of assets across chains, it's going to become more wallet centric and less chain centric. Like I buy the people don't leave the wallet. I don't buy the people don't leave the chain.
I agree. Totally.
Because look, people want to buy assets that go up, irrespective of what chain that is.
Completely agree. So can we talk for a second I would be curious to get your guys' perspective on just because there's so many eyeballs on Bitcoin now, and I'm, at least on my feed, starting to see this very familiar refrain of Bitcoin's going to crush it this cycle. There's not going to be an alt season. There's, we're getting close to the death of, ETH BTC ratio, and there was the death of ETH type party. And maybe to editorialize my own perspective here is that this feels really similar to me, like December 2020 timeframe, where Bitcoin dominance peaked. Everyone was saying the same thing. It's only going to be Bitcoin this cycle. You even start to see, I'm seeing a lot of like, oh, now that there's options, there's this gamma squeeze, which is going to make Bitcoin an even higher vol asset than it has been it's all these arguments. I feel like I've heard these things recycled 3 times, now.
And in 2017.
Yeah.
Oh, yeah. It was Bitcoin led. It was all we were going to do. And then people were like, what the fuck are these ICOs? And it was like, oh God, here we go.
Well, remember, okay, so here's the timeline. In March of 2017, you had the Winklevi put out their Bitcoin ETF proposal. And then as soon as that got shot down, that was the catalyst to having the first ICOs. And it was the rotation at that point. It was end of 2016, early 2017, Bitcoin, rallies. And then it's a transition completely away from Bitcoin into Ethereum, because that becomes the asset of choice for trading these and raising money for these ICOs. And I think the first one that really kind of like shock and awed everyone was Brave in May of 2017. Basic attention.
Banger.
It did like $35 million in 28 seconds or something like that. And you had to like build a program. Like I literally built a program to be able to like try to cram some ETH into that address. And so much. Those are the days. Those are the days. But every single time there's a new transition. It doesn't happen just naturally. I think that's one of the things that we should also keep in mind. I think last time Bitcoin peaked, when Tesla started adding into the balance sheet, Elon went on SNL, and Michael Saylor was kind of like buying, but nobody knew how high he could send it. And then it transitioned, and through the summer of 2021, ETH kind of took over, and ETH was the asset that won, leading into, I think, November of 2021 was the peak of ETH at 4,800, give or take. Every single time, it's the same cycle. You have a run up in Bitcoin. However high it goes, kind of provides the trajectory of what the next phase will be, which is an Ethereum run. And then after that, alts run after that. And so I think we're just in the same exact cycle where Bitcoin's going to get the bid first. The higher it goes, the better it is for everything else. And so we want it to continue to go higher, obviously. But the ceiling top, I think, is, so once again, market structure being different, what you would historically have is you would have Bitcoin first, and then you'd have, let's say, Ethereum, and then you'd have alts. But to move from one phase of the cycle to the next, you have to sell Bitcoin to buy the ETH. And so that's what creates this like selling, buying dichotomy. Whereas now we don't have the same effect because of these ETFs acting like liquidity black holes. And so I think what we're going to see is just a fundamentally different phasing of how this stuff transitions from one phase to the next, where you're not having to sell one asset to move into the other. And the amount of capital that we're talking about is like multiple orders of magnitude higher. We're talking hundreds of billions at this point, which is just a number that nobody would have expected in 2021 and definitely not 2017. But so the fact that we have all the capital, we have the infrastructure, we have the products now to buy, I think markets are going to be fundamentally different.
Do you think there's I'm not a markets guy at all here, so I'm just completely speculating, but there's a round number effect around 100K? I could see
a psychological effect, which is like
huge, huge effect. I mean, 100K, like the basic math is, can this double?
Yeah.
100K, 200K is a big number. Big number. People are just going to be looking for things that can double based on unit bias, is my guess. 100K, the 100K is such a big landmark. We've spent the entirety of crypto mostly between, I would say, 15,000 and 40,000. That would be probably like 70% of the time. People are going to think they missed it, and they're going to rotate to other assets. And I think really there's going to be a bunch of catch-up trades, but I think the ones that do really, really well are the new L ones. That's my guess. Bera, Monad.
Look at Sui.
Yeah. It went down. Congratulations, Sui. I saw someone, I think it was Dudis that tweeted the baton pass from Solana to Sui. Now that
look, there's always a market for being early to things.
Totally.
And if you can have some sort of new take and novel take and culture and on-chain activity, especially, I think you're going to do very, very well in this environment. Exchange listings, I think those will kind of open up for those protocols. But those are kind of like, one way to think about coins is like movies or TV shows. There's some that are like the Avengers, where it's like they go live in theaters, people leave their houses to go see them, they pay, they sit down, they put their time and attention there. There are others that are like indie movies that straight to DVD, straight to Netflix. I'll catch up on it if I hear good things or if I have time, whatever. I think the Avengers of this cycle movies, those are going to do well. The indie movies, I don't know. There's still things like Scroll, that are just basically down only price action, and maybe it comes back, but that's the risk of kind of being in that indie movie category.
I think the one thing that's been missing, I was talking to Yano about this, and he made, I think, a good point that there hasn't been any real new category creation this cycle. DePIN is probably the closest thing that people are excited about. But I mean, the things that what's doing well right now, Bitcoin is running meme coins. And honestly, come on, how much can you really talk about meme coins? I don't want to be the boomer being like these things feel overheated, but that's kind of been my read on them. They're fun. I own a good amount of them. But how can you really talk about it on podcasts? Whereas in the past, there was so much to nerd snipe you on DeFi that was happening. I mean, it just felt like this totally brand new, very interesting thing to talk about. Maybe I can't believe I'm hearing myself say, but like DeSci as a category is the first thing I've kind of looked at as a new category creation.
I don't think we need anything new. Okay, so just to like run this back a little bit, meme coins. Okay, there's some analogies to like the NFTs of last cycle. It's kind of interesting. People are punting it around. It drives retail adoption. DePIN, too broad of a category to say like, oh, that's something that's new. Like everything, if you boil it down, like Bitcoin is DePIN, right?
Yeah, I agree.
And so I think you can't really say like DePIN is one thing. I actually think there's no reason why DeFi isn't still the new thing based off of what happened in the election. And I think being able to onshore and bring back DeFi into the United States is really the promise here and what we're going to look towards 2025 to accomplish. We now have the ability to have decentralized financial applications that aren't going to get regulated into oblivion and at least have a sandbox for whatever it is that they want to do. So I actually think DeFi comes back in a very material way.
So we didn't talk about this actually, but I was in DevCon. I was in Bangkok the last week, and I had a couple of takeaways. First, most important takeaway is never eat oysters when you're in Bangkok because you will die, which I did for about 4 days. So never do that. Most important takeaway. The second most important takeaway was, the DevCon conference is extremely well organized. I was blown away by how many they got 10,000 people to actually be in this hall. Like the main event was excellent. But the amount of people that I talked to that are excited about New York next year in the US, and they're either moving back to New York or opening up an office in the United States or whatever it is. I think the next 6 months, you see it on Twitter. It is a narrative. I understand that, but I think it's real that people are going to be moving back and that this market is opening back up. And I think that's the story of 2025.
100%. We have 3 portfolio founders who had the exact same perspective, moved away for the last 3 years. Hey, it's time to let's go back to San Francisco. Let's go back to New York. Game on.
It's coming home.
It's coming home, baby.
It's coming home.
The other thing that just got announced is FTX distributions will be no later than March 2025. So if we're talking about catalysts that are coming up, there's a lot of cash that's going to get delivered back to crypto creditors that don't have any crypto left. And March is, I would imagine that it actually starts earlier in Q1, but you're going to start to see a lot of money flowing back to people who want to buy assets.
Also, all the VCs are selling their assets.
Right.
That's
the other scuttlebutt, which, if you think about, so let's explain what we mean. So last VC funds for most of these firms were raised at the end of 2021, early 2022. What that means is typically you have a 2-year investment cycle where you're investing for 2 years. At the tail end of that, you start to raise your next fund so that you can, not miss and have like a gap where you don't have any capital to invest. What most venture firms did, just given 2022, was they extended that investment period for a year. Some of them didn't, most of them did. And so what you're coming up on is most of the venture funds are at the tail end of their capital base. So they're being a lot more choosy in terms of what they would deploy capital into because they don't have much left. And a lot of the funds, at least the ones that we talked to, were thinking about starting their fundraise in, let's say, June, July, August, maybe even September. Uniformly were met with, don't even think about it until after the election, responses from their LPs, and are now looking at starting right now or starting in Q1 their fundraise process, which typically takes 6 to 9 months if you're a multiple $100 million fund. And that means that a lot of these funds also, I think, were given feedback, which is we don't care about your marks. We don't care about the assets that you think are going to perform well. We need to see DPI, which is distributions out of your previous funds, to be able to continue on and raise another fund. Maybe some of those LPs are like, you got to give capital back so I can put it back in. But a lot of the LPs are also just like, you need to show that this stuff, you can perform on distributions. Because also, the traditional venture industry has had zero. If you were in a venture fund that started in 2018 or later and you have any distributions, 100% of those distributions came from crypto. You have no traditional venture distributions in the last 6 years. And so the LP landscape is show me the distributions and I'll show you the commitment to your new fund. And that is what is going on right now. Amongst all of, a bunch of our peer funds, which towards the end of Q4, which you've got 40 more days, they're going to be selling everything so that they can get the distribution marks by the end of Q4 to be able to go raise their next fund in Q1.
Can you guys comment a little bit on, from your perspective, has the one thing that we've talked about is the allocator market has still been pretty lukewarm about crypto in general, especially pre-election. Has that changed at all from your guys' perspective, or what do you think?
Yeah, I think it has a bit. I think it has a bit, especially with Bitcoin at 100K, you have to pay attention. And you're too late for Bitcoin too, which is kind of the other dynamic where LPs used to be like, why should I pay you to hold Bitcoin and ETH when, I can just do it myself? And the answer is you didn't do it yourself. And so you missed it. And now you're playing catch up. And so the question is like, what strategy do you want to allocate to? And basically the only strategies that make sense are a venture fund structure. Hedge funds and liquid funds, I would say, are still not in vogue. I would say that's not just a crypto thing. Like the era of like long short hedge fund dominance is probably receded and it's gone to like this more like pod shop model. And maybe they get their crypto exposure through that at some point in a liquid context. I do think the market is sorely missing like more value oriented liquid fund managers, but that's kind of a different topic. I would say everything's back though.
Yeah, the value-oriented liquid buyers, I think, frankly, venture funds will probably have, like the crypto venture funds, quote unquote, will be the ones that have to step in and do that type of investing. You invested at a $200 million valuation and it trades on Binance, but it's trading at 100 and it's doing 50 million in revenue and 20 million in earnings. Like those types of venture scale outcomes are still possible in the public markets. It's just that nobody knows, other than people like ourselves, nobody knows, where to find them, where to get them, how to get access, how to work with the team, et cetera. Like those are the liquid venture opportunities that crypto presents in a unique way. But the allocator landscape, I mean, look, a lot of the traditional kind of like endowments, pensions, foundations, like they don't care who's in office. They want to know that this industry is legit and it's going to survive. And I think anybody who was paying attention knew that it didn't really matter who won the White House as to whether or not this industry was going to survive. But the catalysts were definitely faster one way versus another. And it's more the like family offices, the smaller ticket sizes that are like, ooh, this is interesting. Let's put some more money into this because we think that there's, it's going to be a good fund cycle. And so I think from like an allocator perspective, it really depends on what your LP base is. If it's more kind of always on capital, endowments, pensions, foundations, it's business as usual. Maybe some of them are a little bit faster, quicker on the draw. But I think what you definitely see is the smaller ticket sizes, the faster capital, family offices moving in the direction of crypto.
I think there's a big opportunity for the more value-oriented funds in the space. I guess the challenge there is that you've got to look past the shiny objects, and there's going to always, when there are these crazy bull markets, there's always some face-melting returns that it would be challenging if you were a little bit more disciplined to the. But there are funds out there. I got to shout out Thea. They do a really good job on this. They feel very disciplined. I'm not sure if he's actually structured more as a hedge fund or as a VC shop, but Arthur Thong.
The other one is Split Capital with Zahir.
Yeah, Zahir does really well. So I think there's going to be an upcoming cohort of managers that maybe start a little bit smaller, and it takes them a long time. And the alpha there is just discipline to stick to what you know. But I think there will be those sorts of opportunities. Like Morpho, I don't know if you guys just saw, went live today. I mean, it's pretty reasonable valuation, really blue chip project. They're a great protocol that just ships and moves very quickly. So I think there will be these opportunities. And I don't know, I've been seeing, Chris Berninski sort of espouse this opinion that meme coins, I feel like you guys have been talking about this too. So I now can't remember whose opinion this was. Maybe Vance, I saw you tweeting about this, but it's going to make the actual projects like show me the money, right? Like the meme coins are sucking up a lot of the hot ball of money speculative type flows. So now projects, it's actually incumbent on them to deliver results. And I think there will be a handful of projects that do that in spades. So should be big opportunities. But
it's also just fascinating to see how different people think about crypto markets, because it's just so venture heavy. And at a certain point, that's kind of like an albatross, because it's just like everyone's incentivized to launch new coins.
Yeah, very true.
What about the ones that already exist?
Yeah. Because there should be, especially if more value ends up moving to the application layer, that should be, I don't know, I feel like maybe a smaller handful of winners, but the scale of those winners should be very, very large. There are definitely 100 or more X opportunities out there in liquid markets today. It's just tough to figure out which ones those are.
Look, the most alpha that we can provide is go look at the DeFi 1.0s and the ones that are working and the ones that are live and the ones that are transitioning to something new. I think there's a lot of activity that's going on in that ecosystem that still is very much underneath the surface.
Completely agree. All right, fellas. Anything else on your guys you want to chat about? Did we miss anything this week?
No. Thanks, guys. Appreciate it.
Yeah, appreciate you guys. This was sorry I missed last week, but we'll be back again next week. And yeah, I'll show our Telegram group if you guys are listeners. Come join. Good debate, good hangs. So
seriously, free alpha. Come in.
See you guys.
Financial advice.
Not financial advice.